Hey, everybody, it's your boy, Sean McLaughlin, at Options Sean on Twitter. Today is Thursday, January 16, 2025. Hope you're doing well. Hope you're starting to get into the rhythm of the new year. Man, we just have broken weeks after broken weeks with holidays and half days. And then I just found out we have another day coming up. We're off this coming Monday. I'm always the last person to know these things. So, man, I just feel like it's been a weird start to get this year going. Like, I just want to get into a rhythm. I just want to have the market open every day as normal. So if you're feeling a little out of balance like me, just know that you're not alone. All right, so this is the All-Star Options Jam session. What we do here is we review, we take a high-level look at what's going on in the market and what's affecting our positions, and then we get into action and activity within some of the open positions that we have in the All-Star Options portfolio, any positions that we've exited, whether for a win, whether for a loss. We review some positions we may have made some adjustments to, or maybe we were looking to make an adjustment to. So we'll review any action that needs to be brought to our attention. We'll also review updating stops on positions that we have that are either going our way when we want to lock in some gains, or maybe just minimize potential for any further losses from here. So we will update stops as needed. And then we'll review some of the newer trades we've put on in the week since we last spoke. All right, so before we get into that, of course, I have to start with the old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I'm hoping that you're learning something along the way from following or seeing me follow my process. All right, so let's jump to the charts here. Here's the QQQ, the NASDAQ index. We've had a nice little bounce over the last 3-4 days or 3 days. Uh, has the market put in a bottom? I mean, that would be a nice, beautiful spot, nice round number for the Qs to have dug in and found a bottom, right? Right at 500. That would be nice. Similar story in the S&P. We have a nice rally here for 2-3 days. Was that the worst of it that we saw last week as sentiment was starting to get really ugly across the market? At least in the people I talked to, it seemed like a lot of people were kind of throwing in the towel with the bull market, right or wrong. But we've had a nice bounce. Is it going to stick? And are we going to go higher from here? I would like to think so, but I don't think. And I'm a broken record on this, guys. I've been saying this for the last 4 weeks or so. It's not going to be the same bull market that we had in 2024. It's going to be choppy, and the price action we've seen over the last 3 weeks bears that out. It's further proof to me that yeah, it's going to be difficult. All right, so let's bring up action in the portfolio. We have a bunch of positions that we exited. We have one that we made an adjustment to. None of this is bad, or none of this is good news, but neither is any of it really bad news. So let's just get into it. But let's start with the trade adjustment first. We have a position on in CCJ. This is a position that started out as a January 2026 call calendar spread. So we got into this back in October. We sold the December options that have already expired. It expired last month, and we purchased January 2026 $80 calls. So they still have another, little bit, yeah, a year until expiration. And we paid 350 net to get into that trade. Well, you can see here at the bottom, I've listed out all the adjustments we've made to this trade, the adjustments according to the plan as we laid out, by the way. But you can see this circle here. That's where we first enter the trade. These additional circles here, 1, 2, 3, are where we rolled calls. We rolled the short calls that were a part of this call calendar spread to bring in additional credits. So on November 4th, we brought in a 36-cent credit. On the 11th, we brought in a 95-cent credit. And then most recently, this week, we rolled our March 65 calls to the June 65 calls and brought in an additional $1.13 credit. Now, the nice thing about all this, guys, is that when we originally put the trade on, we were risking $3.50. That was our initial investment in this trade, and we sized our position according to that risk. Well, thanks to these three adjustments, these three rolling credits we've earned since putting that trade on, our new net cost now, when you factor in all these credits, our net exposure now is $1.06. So if CCJ were to go to zero tomorrow, the most we're out, the most we would lose in this, call it campaign, would be $1.06. It started out as risking 350. Now we're only risking $1.06. So that's the beauty of call calendar spreads, where we get to reduce our cost basis as the trade goes on. Maybe we'll get a couple more opportunities. We're short the June 65 calls, right? So from June until expiration of the long January calls, we have another 6 months. So there's potentially six more opportunities to roll and bring in more credits. But what I will end up doing, guys, is if I'm lucky enough, if I'm fortunate enough to do enough rolls that this net debit becomes a small credit, then at that point, I will stop doing any further rolls. I will now have a free ride on those January 2026 calls. And again, CCJ could go to zero at that point, and I'm still a net small winner in that case. So that's my game plan going forward on CCJ. Of course, I'll keep everybody updated on this trade here in the Options Jam sessions, as well as in the live chat room that we have. And if you're not involved in the All-Star Options chat room, get involved. Be part of the conversation, folks. Please, if you're not there, reach out to Mary. Info@allstarcharts.com. She'll get you the credentials, get you logged in. It's for All-Star Options subscribers, and we'd love to have you in there. All right. So that's the one bit of good news. The rest of these four trades here that we got to talk about are all we all got stopped out on. They're all losses, but that's okay. This has been a choppy market. There's going to be some casualties. The silver lining on all of these exits is that none of them were terrible losses. So let's just start with Square or Block Inc. We were long the June 125 calls. We paid 454 back in late November. Well, on June 10th, we traded below my stop loss level and closed below there. So I exited the next day right here on Jan 13, and I closed it for $1.46. Did I sell the low? It's possible. It's possible. I'm not looking to get the best price on my way out. I'm just looking to get out because Square trading below 87 just invalidates my bullish thesis. Yeah, we're back above it now, but I mean, this is not a chart that I would like to buy if I was coming at this from a clean slate right now. This is not a chart I like. So no sense in being long anymore. So I'm out. Got out for $1.46. Again, not a total loss, but this is the worst of the four. So it gets better from here, I guess. Apple, this is a trade that we had a detailed plan to leg into the trade, meaning we were going to buy calls at lower and lower prices. And as you can see here, our first purchase was on December 3rd, right here for $7.50. We were buying the December 300 calls, the December that expires in 11 months from now. And then we bought an additional tranche on the 3rd of January for $6.75, and then on the 10th of January for $6. Again, all according to the plan. We had put out limit orders, good till canceled, just waiting for these to get filled. It looked like at first we got the first tranche, and that was all we were going to get. Is Apple's just rocketing higher without us. First class problem to have. Winning trade, but not as big as we would have liked it to be. But then when Apple rolled over, we finally got filled on those other two. Unfortunately, Apple kept going. And so we had to close out of the trade, closed all of them at 480. Not a terrible loss, all things considered, right? But we are now out of Apple. We had a bull call spread on in GameStop, a January 30-40 bull call spread, meaning we were long the 30 calls, short the 40 calls. And unfortunately, we're running out of time. These are January expiration options. The options expire tomorrow. And so we had to keep a tight stop on this thing. And unfortunately, our tight stop got tripped on the 14th. It closed below it. And so we traded below that stop. So we had to get out. I got out for 90 cents, but not bad, right? We paid $1.35, got out for 90. Not bad. I'll take it. I'll take it. Finally, the one bearish trade that we had on the books did not go according to plan. This was a bit of a portfolio hedge, getting short one of the weakest names in the market to help, provide a little portfolio diversification, as they say. And we were in a bear call spread. So what that means is that we were short the February 77.50 strike calls, and we protected those calls with buying the 82.50 calls. We collected $1.50 when we got in, right there on, I think it was January 8th. Unfortunately, the stock ripped higher, went above 78, which was the area of resistance that I was leaning against, and I wanted to see that hold. It did not. So we had to get out of the trade. We closed it for 253. So we collected $1.50 on the way in. Unfortunately, we paid 253 on the way out, so we lost $1.03. But that's it. I'm hoping that's the worst of it right there. The market's been reacting nice over the last couple of days. Maybe we're out of the woods. I mean, we definitely have some bullish positions that are really taking off here. I mean, let's we don't usually do this, but let's review a couple. I mean, here's Robinhood, a bull call spread that we are in. I'm loving this action in Robinhood. This is very instructive to me. Very good. SMTC was looking good, but I don't like the way it's trading today. But yesterday's breakout there in SMTC was felt pretty good for us, and it was a good signal that I think things were clearing out. And then RRC, totally different sector, but this one's breaking out for us. This is a newer position we got in recently, but off to a good start. So there is reason to be hopeful here, guys. There is reason. We might be out of the woods. We'll see. Fingers crossed. All right. So that's it for the closed positions. We only have two updated stops to review here today. Actually, no, it is really only one because Fez, this is a risk reversal that we're in. This expires tomorrow, guys. So we're bringing this up because, I mean, my stop is at 48, but I don't think that's going to come into play the way it's trading today. We were short the January 46 puts, and we used those puts to pay for the 49 calls. Those 49 calls are now in the money. Okay. And so whatever we can sell these calls for tomorrow, which is, we'll have to, because tomorrow's expiration day, whatever we can sell these calls for, that will be pure profit because we collected 3 cents on the way in, right? So we're already ahead of the game. Whatever we sell these 49 calls for right now, that's our profit. So with the stock trading at 50.29, according to this chart, that means those calls are worth at least $1.29 because they're $1.29 in the money. So I could sell these calls right now for $1.29. That $1.29 plus the 3 cent credit that I got in on day one, that's a profit. So we're sitting in profit here in Fez. So tomorrow we'll be exiting this trade. Going to use a little discretion. I'll probably watch it intraday. But surely if you are in this trade with us, make sure that you get out of this tomorrow. Otherwise, you're going to become an owner of stock at the 49 at a cost of $49 a share, which is not the worst thing in the world. If you want this position and you want to hold it, by all means, please do. I don't. I don't like holding stock. It ties up too much buying power for my options portfolio. So I will be selling this tomorrow. All right, but the only updated stop really that we're updating here is Hood, the Robinhood. And we talked about that a minute ago as stock finally breaking out. When we put this trade on back on December 11th, I put this trade on with no stop loss. The reason being is that I just felt like the way crypto is acting, Robinhood was going to have a breakout commensurate with what was going on in crypto. The crypto breakout has taken a little longer than we hoped it would, but Hood is really starting to perform well. So we didn't have a stop loss, or at least a chart-based stop loss. Of course, I had a stop loss based on the value of the spread. If the spread lost half of its value, that would have gotten me out. But now that Hood is following through a little bit and breaking out to new highs, I have now initiated a new stop here at 35, which corresponds with the basically the opening print on this down candle day on December 20th. I don't want to see Hood get back below 35. If it gets below 35, I'm out of the trade. I'll also close the trade if the value of the spread loses half. So if the spread that I paid $4.50 for starts trading for around 220, 225, I will also exit at that point to protect my capitals, as clearly the trade's not moving as fast as I would like it to. So that's it for updated stops. And then lastly, we'll talk about some new positions we've put on in the last week. We only have 2. I'll be putting a new one on later today, folks. So keep your eye out for that. If you're a subscriber to All Star Options, you'll get details about that trade here in the next couple of hours. But for now, the 2 most recent trades we put on is this RRC. And if you would like details for these trade plans, you can find them at allstarcharts.com. Head to the members section, head to the options section. You will find detailed trading plans for every one of these trades I put on. Talk about what I like about the setup, what option strategy I'm going to use to employ to express my thesis, how I'm managing risk, where I'm taking profits, if at all. All those details are laid out in the blog post for the trade, so that you have that at your disposal at any point during the life of the trade, so that you can manage it yourself. You have everything you need. All right, but we are bullish in our RC. That's the one trade we put on. And then another trade we put on this week is a delta neutral credit spread here in IBB, the biotech ETF. This one was offering, but we feel like the stock is setting up for some continued range bound action. There was attractive premiums for us to sell to increase our odds of success in this trade. So again, find the details for that trade on the blog, but we are neutral. We have a delta neutral credit spread on in IBB. All right, guys. That's all I got for you this week. I'll bring this up. I know you guys like this chart. It's easy when there's only one of them, but we just have one updated stop. It's that hood, and it's really a stop initiation. We're adding a stop where we didn't have one before, but our stop and hood is 35. And lastly, if you guys have any questions at all, please shoot me an email, info@allstarcharts.com. That question will get routed to me. I'm happy to engage with you there. You can engage with me on Twitter, or X, as the cool kids call it now. My handle there is @OptionsSean. And by the way, guys, in a little about 45 minutes from now, if you're interested, head to my X stream, my @OptionsSean stream. I'm going to be doing a live chat with a trading psychologist named Andrew Menaker. We're going to talk about, some of the stuff that goes on with traders and inside their heads, and how we can battle these things. And just know that you're not alone with the struggles. We all struggle with trading. So we're going to have a nice little talk about that. It's free to anyone want to join. It'll be happening at the top of the hour here at 1 Eastern. So keep a lookout for that. All right, folks, that's all I got for you. Have a great rest of your week. Maybe you'll hear me chatting a little bit on the Twitter Spaces. Otherwise, have a great weekend. Go Bills. Go Bills. The AFC Championship is this weekend. I know it's not the AFC Championship, but it's the real AFC Championship. Come on, Buffalo versus Baltimore. I mean, that's it. The winner of that's going to the Super Bowl. You heard me here first. All right, guys, take care. We'll talk to you next week. Bye-bye.